Hey everybody, happy Thursday to y'all. Happy Halloween. Look what I'm dressed up as. I'm dressed up as
a joker.
A joker? A toker and a midnight smoker. Sure don't want to hurt no one.
We should start a barber duo.
Anyways, this is no longer a show about cannabis. This is a show of people on cannabis who are just going to demonstrate and display unequivocally their third-rate musical talents, and that's why we're here. Da-da-da-da! Hey, if I could sing like Justin Bieber, I'd probably be in jail. Anyways, Edward, how are you doing today? Special Ed Milewski is here.
I'm doing fine.
Pressing the flesh with none other than the famous Rob the Gronkowski, who just left here. We did an interview with him, which we're just going to tee up and air here shortly. But
will we air it today?
Yeah, we're going to air it today.
Really?
You're going to have more air today than the air on your Ed. Anyways, Alan Brochstein is here as well. Alan gives us a long and cogent discussion about seeking value among the cannabis participants in the U.S. market today. Anyways, audience is complaining they haven't got their YouTube notifications. What's going on? The reality is...
What's the reality?
The reality is that we live in an alternative reality, Edward. Our alternative reality...
I'm starting to think I live in an alternative reality.
Well, I know I live in an alternative reality because I say things to people and they just look at me like either A, they want to knock my block off, or B, they think I'm absolutely insane, or C, I'm speaking another language. And most of this has to do with when it comes to the world of high finance. And I don't mean global high finance. I mean when you're high and you're talking finance and things are barely intelligible as it is. But no, we saw gold spike to 15.15 earlier today. I haven't had a chance to look.
It got up to almost 15.20 on the first contract.
15.20?
Well, I'm talking the first contract month. You look at the spot price.
Oh, you like to dwell in the future. I like to live in the present. You do live in an alternative reality, don't you? Actually, your reality is. Look at me using your comments to belittle you to make myself feel better.
Yeah, you know what? That's a ploy that people with sort of small mental capacity use to make themselves feel better. I'm not talking about you, of course.
Sounds like you are.
No, I'm just saying, like people. What?
Huh?
Somebody's talking to me?
What, your voices?
You know what? And people say there is no God. Like, guys talking to me.
I think there is numerous gods. Although let's not stray off into the realm of the religious, because that never ends well.
You know what?
It's just a matter of words till you offend everybody.
You know who I bumped into today?
Who?
John Contact.
Who?
John Contact. You know John?
John Contact?
Yeah, Contact. No T at the end.
What, did he get ripped off at birth or something?
Kontac, I believe.
Kontac. Okay, so what's going on? Everybody's, put him on.
Should I?
Here we are, live from Spain. It's
live
our
from
friend
Spain, Peter Cunningham. Peter, you're on the show.
How you doing, Peter? Important. What do you got to say for yourself?
Oh, wait a minute.
Wait, put him on speaker.
How's that?
Are you guys on the show?
Yeah, this is our Barcelona correspondent calling in.
Yeah, anything happening there? What's for lunch today?
What's going on in Barcelona?
Markets are tough.
Markets are tough. Boy, there's a sweeping generalization.
This guy's an observer.
Boy, he's got it switched on. Peter, are you watching the show today?
Averaging down.
Yeah.
You're averaging down. Averaging down. That sounds like good advice to somebody who's probably got a lot more cheap paper on that. Anyways, we had Rob Gronkowski here earlier, Peter, and that interview is going to be a little bit later on this afternoon. What day is it?
What day is it?
What hour is it?
Thirsty Thursday.
Thirsty Thursday. Yeah, Halloween.
Actually,
It's Halloween. That's the
I had
big.
a couple beers at the kids' Halloween party.
A couple of beers at the Halloween party. Was it a trick or treat?
I trick or treated.
Anyways, we'll
Okay.
talk to you soon, Peter. Thanks
know
for
what?
the update from Barcelona.
Thanks a lot for calling from the south of Spain. Talk to you
All
later.
right, big news today in the cannabis space. Liberty Health Sciences. Now, this is, Alan is going to point this out in our conversation. Liberty Health Sciences, the company that the industry loves to hate, turned out a pretty damn fine profit. 7 cents a share, fully diluted. $22 million in revenue. Net income of $22 million.
LHS?
Yeah, but listen to this. Q2 20 revenue of 10.3 million and net income of 22.9 million. Now, tell me, this is the fun thing about the cannabis industry.
Stock had a good jump here.
Is you pull in so much money from sales and then you just mysteriously add more. Did you hear that? 10.3 million net income, 22.9 million, net income 22.9 million on revenue of 10.3.
Magical.
Isn't that spectacular?
Wow. What if they took that revenue down to zero? Would they make more?
Well, Jesus, probably.
Yeah.
It seems the less you make, the more you earn.
Well, you know what? I'll tell you something today. If you look at SNC Lavalin, you know SNC Lavalin, they're embroiled in that.
The guys who are the equivalent of the Brazilian car wash.
They came out and said today they made $15 a share.
SNC Lavalin.
Yeah, and the stock's at $20, $21. Now, to your point, this is what they do. They make it sound like they made that money, but what they did was they sold the ETR, the electronic toll route, and that
The 409.
407, I believe.
407 rather. 407 rather.
She's
right.
real
I take
fine.
it all the time.
409.
That's the problem.
Yeah.
407.
So that they've made it look like this company's made a huge amount of money. Although what they've done is they've cleaned up their balance sheet.
So basically, they've sold off a bunch of items for a one-time
gain.
bump to
Yeah, these are all.
So if we strip that out, did they make any money? I mean,
You know what?
SNC Lavalin is a dying beast at best.
And the stock's up huge because they reported this money.
So much for
It was up three and change because they got all this cash now.
so much for IFRS.
International financial.
Al Rosen is a forensic accountant
Yeah.
who wrote the book. What was it called now? Oh, damn. I can't remember.
Oh, I know because he was the guy you went to see at luncheon at that men's club. Not men's club, but business club.
No, he was on our
Business club.
show.
Yeah.
He wrote the book, Easy Prey Investors, Why Broken Safety Nets Threaten Your Wealth. And Easy Prey Investors is a giant critique on the entire auditing industry, basically placing the blame squarely upon them and the regulations under IFRS that is causing investors to consistently do worse over time with these large corporations and in pension funds because this kind of financial chicanery is permitted. If you get Al Rosen on the show, he'll go a step further, and he's no longer an accountant for the courts in Canada because they're afraid of what he might say. And I'm telling you, if you haven't read Easy Prey Investors, you got to give it a look. This paints the real picture of what's wrong with accounting for corporations in Canada. And here's the evidence. SNC Lavalin already embroiled in the controversy from their involvement with getting Trudeau to put pressure on the Justice Minister, resulting like how they pulled that election out of the hat is beyond me. Clearly, most Canadians are not concerned with the rule of law and are happy to have, I don't know what they're thinking, but anyways, let's not get off on a tangent. This is a show about cannabis.
Bit of a tangent.
Bit of a tangent there.
So the stock, just to point things out though, just why if you think you got a real dog, and
Pulling up a chart on SNC Lavalin?
you short it, whatever. Yeah, there's the chart.
Let's see it.
Anybody want to pull up this chart?
Hey.
Look at it. It was down to
Whoa.
$15. It's now 23 and change. What's wrong with that?
$15, 23 and change by making $15 a share. Reporting $15 a share.
But it's in obviously when they started looking at what are the impact that the sale of this asset's going to be to the company, Anyway,
You've just
saying.
made me actually want to read through the financial statement, which I'll try to do while we're talking. We'll come back and kick some more sand in S&C Lavalин's face. But other companies put out earnings today, and Apple reported fourth quarter results.
How are they?
$64 billion.
They made money
versus the earning consensus estimate of $62.99.
Revenue. You're talking revenue, right?
Yeah, basically they did $1 billion more than everybody thought they would. Earnings per share of $3.03 versus the consensus estimate of $2.84 a share. Q1 revenue guidance is $85.5 billion to $89.5 billion versus $86.92 billion estimate. Interestingly, iPhone revenue is up, which to me, do you have an iPhone, Ed?
No.
I'll tell you what. I've had an iPhone in every iteration since iPhone 4, and I can say unequivocally that this product gets shittier and shittier with every iteration. The battery lasts longer, the phone is less durable, it sells you more stuff.
Wait a minute, the battery lasts longer? That's a bad thing?
No, the battery lasts less longer.
You didn't say that.
Shorter.
Okay.
The battery lasts shorter. Is that a correct euphemism?
It doesn't last as long.
It doesn't last as long. Thank you for that, Edward. I'm a little bit...
That's how I would have said it.
A little off on my sentence construction today. Probably because of the excessive nature of the Moscow Mules I drank last night.
Oh.
And the red wine.
Oh.
And the beer. Oh, and the edibles. No, I didn't do the edibles.
No edibles?
No edibles. That's the problem. I didn't do any edibles. So that's an interesting outlook. Apple is sales of cell phones rising again after dropping. Thought they were going down. Now they're going up. Anyways, I can see that you're very interested.
No, I wanted to make a point. I was not planning on staying in Toronto last night, and I'll check the rates because we had a big business meeting with these guys from Montreal. Anyway, I got a room in Toronto for $111 downtown, which I've never seen. I haven't seen that.
For 15 minutes? Because that's kind of pricey.
$111.
$111 per quarter hour. That's $444.
Duh.
No,
come on.
Did it come with?
We don't want. Yeah.
Okay.
All right.
Let's keep this clean.
Anyway,
I am joking. For anybody watching,
there's some evidence out there that things are slowing down. I mean, you can't get it.
Well,
sometimes you get that room for $350.
Well, the hospitality industry has been completely undermined by the sharing economy, like Airbnb, but not just Airbnb, but people, there's all these alternatives now. Airbnb, what else is there? There's like Kijiji, there's like all these online classified sites where people are renting out their boxes, for God's sakes, if they think they can get $1 a night for it.
They're boxes.
They're boxes. You want to talk about a cheap night in town.
You know what?
Have you not rented a box before? Less than $1 a night. And if it comes on a heating grate, it's $1.25.
Jesus.
Anyways, Altria. Now,
Did you hear
Altria put $2.8 billion into our friends at Kronos Group, but they wrote down Juul by $4.5 billion.
$4.5 billion.
$4.5 billion.
Is that U.S. currency or is that pesos or something?
That is USD, my friend. USD. Actually, this is another case.
Do you think somebody lost their job over this one?
I don't think so yet. I think they're probably all sort of...
They're looking at somebody in the boardrooms looking at somebody.
It's like all the penguins trying to get onto the iceberg when the waters are full of killer whales.
Oh, yeah.
It's like they're all on there. They know one of them's going in and going to get eaten. They're just trying to jockey for position.
Is that right?
Yeah.
Isn't that cruel?
They put $12.8 billion into... Altria put $12.8 billion into Juul for the 35% stake. And now they've already written off $4.5 billion of that. Like, do you think they're worried about their Kronos Group investment?
I think they're flucked.
They're flucked.
I wonder what Altria... you know the ticker for Altria?
Kronos would maybe take over Altria now.
Altria.
If Altria's fortunes keep going the other way. Anyways, do you remember that the executives at Altria were reportedly landed a private jet at the airport near Leamington, and some guy caught the tail number and put it all up online and traced back the license plates of the SUVs that picked him up at the other end, and deduced the fact that they were Altria executives visiting a Freya, and then they turn around and do the deal with Kronos, and everybody's like, what?
What?
That was kind of crazy.
Okay, well, let's just take humor me here. Look at Altria stock, okay, for instance. I've got a 6-month chart up.
Yeah.
I just want to see if they've been punished at all, Because
private. Yeah, take it out.
Okay, look at. Well, it's basically moving slightly, top left to bottom right. So the trend is definitely
lower,
and rightly so. Right, and if they're writing things off, and I mean, the Kronos thing, there's got to be a write-off coming there too, no?
Kronos, I don't think so, and I don't know. And we'd have to look at Kronos financials for that. But I mean, you can't keep writing off your investments.
Yeah. This thing got down to about $39 here a few weeks ago, a couple months ago, and now it's 46, 45.
It's not looking so bad.
Well, this move here, these things always baffle me. Bad news comes out, and the stocks had a run.
Well, I mean, look at the trend is lower.
Yeah.
So maybe and if they only own 35% of Jewel, so it's a one-time write-off, $4.5 billion. Maybe Jewel pulls its.
Yeah, but maybe they've got more to write off.
Well,
as time goes on.
Have you tried a Jewel?
No.
So a Jewel is basically just nicotine vapor, and it's like, how can that ever be good for you?
Bubblegum flavor.
Bubblegum flavor. Sorry, we're
double mint gum. That's what that sounded like, right?
You're
emulating.
Two. It's in one.
No, they're two. It's a breath mint. No, it's a freshener.
And she told two people, and he told. Never mind.
Okay.
We're speaking a different language here, and we apologize for that. We would have subtitles running across the bottom, but no. Anyways, it's time to talk to Mr. Alan Brochstein, who joins us all the way from Houston, Texas, right now. Right now.
Wakey.
I'm joined now by Alan Brochstein of 420Invest. Alan, welcome back.
Hey, thank you, James. Good to be here.
Alan, let's start with an overview of what's your take on the market and the ongoing, we'll call it a correction still, even though that's starting to sound like a bit generous and optimistic. What's your take on what's happening in the cannabis space now generally?
Yeah, it's funny, that correction, bear market, whatever you want to call it, it sucks. And
Well said.
It's been a brutal year, and a lot of different factors contributing to it. But here we are amidst what I've been calling the cannabis capital crunch, and it's going to separate the big boys from the little boys, or the big girls from the little girls, as it relates to cannabis. And I think it's buckle up. It's going to be interesting. We've seen what looks like the first public bankruptcy, Dianamed in the process. We're seeing companies raise capital at just disastrous terms. The Zanabis rights offering, for example. So it's really, Kushco came out when they did their deal at the end of September and kind of surprised everybody. And, they really set the tone accurately, I think, in terms of this is a survival mode for a lot of these companies. Unfortunately, the industry is a growth startup industry and relies on capital, and the capital spigot has turned off for now for a lot of companies. And you have at the same time other companies that are able to drink from that well, like Trulieve yesterday reopening its bond and warrant issue that it had done in June at just slightly worse terms. So. Just to summarize it all, I mean, I'm very optimistic. This is not a problem with the cannabis industry per se. There's been a few issues, the vaping crisis, California slow, Canada, complete disaster in terms of opening up retail stores. But I think all these things are really short-term factors and not permanent factors, even though every day it seems like there's something new, like Quebec raising the age to 21, which seems kind of silly. But I've been telling my subscribers at 420Investor, I've been speaking publicly too, I think the lows were set possibly in mid-October. That's a dangerous statement to make these days. But with that said, the last few years when the lows are in, you just skyrocket from there. I'm not seeing that in the next few months. I think it's going to be a challenging time, James, as this capital crunch plays out.
Yeah, you bet. Do you think that in Canada, Hexo adopted this strategy of selling a drastically reduced in price product, which has not been a drastically reduced quality? So the stage is kind of set for a full-on price war in Canada, at least, which I think in some respects will have connotations for what a price war could look like in America once the interstate borders drop with federal deprohibition, which I assume is going to happen at some point. Do you think that strategy of Hexos is possibly a good thing for the industry, or possibly the first charge in a self-destruct mode?
Hexo's a little bit of an enigma to me. They're out there telling the world they're going to do 400 million in sales next year, and now they're telling us they'll be lucky to do 20 million in sales next quarter. If you multiply that by even 4, that's only 80 million. So their black market buster, I think, is probably more of a gimmick than reality. But I think the pricing environment, certainly on the wholesale level, has been a problem. And I think the real issue isn't so much that there's too much supply, really. It's just that we don't have the retail outlets open. And I think that once we get, most of these a lot of these companies are really focused on those next generation products, the vape pens, edibles. I don't know why drinks, but drinks too. And so hopefully that, even going back to Hexo, Sebastian had pointed to flower commoditization, and I don't think that applies to all companies, because really high-end flower is not going down in price most likely, but there will be some pricing pressure in the medium and low end of the market.
Sure. In such a bear environment as this, there's always some outliers who buck the trend, and that's usually something to do with the value inherent in the company. Do you see any companies out there like that, and what should the investor be looking for to help them identify companies like that?
Yeah, it's kind of interesting. In this environment, the environment we've been in the last few years, we've seen these companies trade pretty much lockstep with one another without a lot of discerning among investors. And so as this capital crunch over the last month and a half has started to really be prominent, it's kind of forced me to look at the companies. I published something at 420Investor earlier this month called Gas in the Tank. And it seems like I already need to update it. There's been some revisions and changes, and it's a fast-moving environment, James. But trying to assess things like the operational cash burn versus the actual cash that the company has, and can these companies move forward without raising additional capital, or factor in a high cost of capital like we've seen. And in doing so, there's definitely a whole range of companies out there, and we've already seen what can happen. TGOD, for example, has cut back its plans because it thought it could get debt and it couldn't. And we've seen a lot of that, not just to pick on them. So as I do that type of analysis, I also like to look at, how's the market valuing these companies? And so, this has been a problem for the sector for as long as I've been covering it, that the valuations have always been challenging. And I have to say, I've gone to my bag of tricks and pulled out a metric that I've been focusing on for a while, but it's never been very widely followed, or quite frankly, it hasn't really been super necessary, and that's price to tangible book value. And for your listeners who don't follow that metric, it's one that value investors use, and I should caution, never rely on a single metric. You should always try to use as many different metrics as you can, and different companies, different industries, different times of the cycle require different metrics. But this metric, by definition, takes all the assets, it subtracts off intangibles and goodwill. So in other words, you're looking at the factory, the inventory, the cash, the receivables, and oh, by the way, sometimes those aren't worth what they're carried at. Be aware of that. But you take that, you subtract out all the debt and obligations that the company has, and you come up with what's called the tangible book value. And then you compare the market cap. And so what I have found, James, is that especially in Canada, there are a bunch of companies trading, some are trading below 1 times, but a lot trading below 2 times. Even some of the ones that we would consider leaders right now, companies that have scaled up, that aren't burning a lot of cash. And so I'm not going to spit out all the names right here, but I will assure your listeners that if you take the time to look, you'll see that there are some companies that I think should be appealing to quote unquote value investors, that And if you layer onto that this downturn is going to wipe out or cripple a lot of companies, and the survivors are going to have a bigger runway for the next cycle up or in the future. And so Canada has a lot of examples of this, and I'll throw some out. They're both clients of New Cannabis Ventures for full disclosure, but Supreme and Organogram fall into this category. These are two companies that have scaled up, that aren't burning a significant amount of cash, and that are trading at pretty reasonable multiples by the metric I just defined, as well as other metrics. So you can go through the entire list of 51 publicly traded companies. You'll look at Tilray, for example, and you'll not come to that conclusion, just so people understand the other side of that. Now, if you come to the United States, it's a little bit different. And most of the larger MSOs, this metric is not going to get value investors involved. But there are a few. And look at today's big mover, Liberty. Again, I want to disclose that's a client of New Cannabis Ventures, and this is a company that was pretty much written off for dead, and the sentiment has been very negative. I've been in discussions with a lot of the private multi-state operators suggesting that Liberty is the perfect vehicle for which to enter the market. And we have some examples, and they haven't worked out so well, of how that works. We've seen 4Front merge with Cannex, for instance. Cannex was an operating company. We saw Green Growth Brands merge with Xanthic, which was barely an operating company. So these aren't really great examples because they haven't led to success yet. But Liberty, if you take a look at what happened last night, they released numbers that anybody should have been able to predict. Florida does a great job of giving out information, and the information should have led one to conclude they were going to have great revenue. What one couldn't know is that they would do so with only a $400,000 adjusted operating loss. So pretty much break even. So this is a company written off for dead by the vast majority of retail investors that's actually executing. And I think, so you go look at the metric, I'm not exactly sure where it is right this minute, but last night when I was looking at it, it was trading at about 1.5 times that tangible book value. And they've actually kind of proven that out. They have cash. Their tangible book value is basically cash and the value of their cultivation facility in Florida, less some debt on their balance sheet. And so they have plenty of cash. So I'm hoping that for their sake, for the sector's sake, for everyone's sake, that an MSO that wants to go public would view this as an opportunity to get into Florida, a great state with one of the top 5 companies, it appears, in terms of revenue and number of stores open, and do so in a way that you just instantly have good liquidity. This was a problem with Green Growth Brands and 4Front. They didn't have that.
Right. Okay, well, that's awesome contribution as usual, Alan. Lots to think about there and digest. We'll come back to you again very soon. Thank you so much for joining me today.
Great to be here as always. Thanks, James.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. All right, then.
You notice how he honed in on the tangible book value?
Intangible.
No, but he backed out all the intangibles to get to that tangible book value.
Right.
Yeah.
TGB.
Well, we were alluding to that earlier in the week about
TBV. Tangible book
goodwill
value.
and other nothings.
Right.
Why do they call it nothing?
Because that's what it's worth.
Yeehaw.
Yeah, but Alan's always bang on the money with his comments.
He made some very, very astute comments there, and he's looking at it the right way. I mean, ultimately it's about fundamentals.
Yeah. If you haven't had a chance to go check out Alan Brochstein's offering, it's at 420Invest.com, I believe, and check it out because he writes a pretty chock-a-block newsletter. Also, so we have Rob Gronkowski joining us in just a minute. But we also had financials come out from MYM Nutraceuticals.
Yeah.
And MYM Nutraceuticals was the company that, if you recall, Ianthus bought all their U.S. assets out of. And
MYM?
MYM?
That little sucker?
Yeah. You remember that one?
Yeah, that thing. Look at that thing. That thing's on fire. Has it been higher before?
Well, the CEO bought a bunch of stock, put in his own money. The financials are not awful. Not awful. In fact, let's see.
You know what that baby got to? Begin at the end of December 2017. It was trading at over $4.
No kidding.
Yeah, talk about your round turn.
Yeah.
Yeah, that's got a sorry on the whole industry. No, like, I mean, you buy this thing. We got a chart up here.
All right.
Look at this.
Whoa,
Look at
is
this.
that it?
Look at that march up. Look at
Okay.
that. Is that not printing money? What is this? This is destroying wealth. But
Right.
somebody,
Okay,
there's been
well,
an exchange.
Tell me, you're the accountant here. How much revenue did they report?
Okay, well, we're looking at the balance sheet. Here we go. I see expenses. I don't see any revenue.
That might have something to do with the general direction of that chart. Eh?
Oh, maybe they're not in the business of generating revenue. Maybe they're trying to do something else.
They're in the business of generating expenses.
Losses. Yeah.
Losses.
Yeah.
Oh, so that's how you generate losses: is you report on nothing but expenses, and you just encumber your assets till they're basically.
Yeah, you got no money coming in, but you got money going out. And if you're smart, and if you see there's no money coming in, maybe you pay some of that money that's going out to yourself.
Oh, wow. Well, let's take a look at the SG&A here.
Uh-oh. What about expenses, employment?
Well, I don't think they break that out. I think they just bunch it up under SG&A, don't they? Just so that they camouflage the fact of how much revenue is being paid to the. Do you think they should make a rule? And people are going to hate me out there, and that's fine because I hate you right back. But do you think it would be a fair rule that if you start a public company, raise money from the public, that you don't get a salary, and you don't get to cash in any of your options or sell any of your shares till you've made money and paid back your shareholders? Do you think that would be fair?
That ain't going to happen.
Do I think that would be fair?
Nobody would go public.
Didn't ask if what you thought it was.
No.
Do you think that would be fair?
No.
No?
No.
Really?
No, that defeats the whole purpose of, like there's the object, like there's the guy, like it's all about.
See, as a guy who does not operate on credit, I think that would be fair. I don't think that you should be paying yourself a salary.
But how do you pay back a shareholder? You say sell your shares, and then you get your money back.
Provide liquidity by increasing the value of the shares and turning over the shareholder base.
Right, but then you don't own the shares anymore. Maybe you want to keep owning the company.
If you're an investor who wants to own the company, then you're in the wrong game.
No, you don't want to own the whole company.
Yeah, you don't want to own the company. You want to make money. That's what investors do.
Don't buy shares. Start a lending money proposition.
Wow. Alternative reality, I think, is going to be the name of our show going forward. Midas Letter's Alternative Reality.
You know what? Take a walk on the wild side.
Hey, babe.
Take a walk on the wild.
Love it. Yeah, we need edibles.
We need.
So where's Cafe? We can buy some edibles from Cafe.
There's one on, I think, Fort York or
Fort York.
Royal
we need one
York
close to the neighborhood here.
Well, this is near. Listen.
What about that one that's over on Spadina that just opened up? Can we get? Do they deliver? Actually, there's a good thing. See if we can get delivery of legal edibles. Oh no, we can't get edibles yet.
No, you need a shatter bar. They got the great shatter bar.
Shatter bar? Shatter bar sounds like it would send you off into another dimension.
No, not if you're,
Anyways, what drove the price of stock? Drove the price of gold up so high?
Well,
Ed, if there was another rate cut, which is generally good for stocks.
Lower rates though drive gold.
Lower rates drive gold.
And the rate dropped, but initially it sold off because everybody thought, well, this is going to be the last cut, and if that's the last cut, then they're going to get tougher down the road. And I think people are saying that's impossible. And I think the world is slowing down. I thought we were going to have a little rally. Interest rates have backed right off. We were looking at interest rates up to 185 on the 10-year. And what are we at today?
10-year.
10-year.
10-year, Professor. 5-year, 10-year.
Wow. All the way down from one. Wow.
What are we looking at? Ed's chart, hopefully. Hello, coffee shop. All right, there we go. Now, what's that view?
That's 3 months.
All right, draw some lines on it now.
All right, okay.
Make it squiggle.
Make it squirm.
Make it writhe in agony.
Okay, hold on a second. Hold on. Okay, here we go. So we tested the all-time lows of the yield. Then we rallied sharply, broke the trend. We've come down here, but not as obviously low. We've rallied back, but we've got a top. We're in a very tight range right now, and it may be a bottoming kind of formation. But if the bondholders ever get spooked and they start selling bonds,
Which bondholders? The 10-year bondholders?
anything.
Any bondholder.
Sovereign debt holders have to sell their debt. That'll drive rates through the roof.
What if China decided to really unload their portion of U.S. debt in a aggressive manner?
Well,
to say on the trade war. I mean, if you really want to take the trade war to the doorstep of Trumpster fire, then why don't you just start blowing out your T-bills?
Yeah. Well, look, they own a lot of debt. I'm not smart enough to know the answer. All I know is this, that things change. They always change. What was in style, 10 years ago is not in style today.
Oh, now we're in the fashion realm.
Well, it's fashion in terms of
Fashion, turn
investment
to the left.
fashion.
Fashion, turn to the right. Ooh, fashion.
I do my on the catwalk. On the catwalk. Remember that one?
Up on the catwalk. Do I? Simple Minds. I went and saw them at Massey Hall here 4 nights in a row.
What was the name of that guy that did? I do my thing on the catwalk.
Well, I don't know.
It's a good tune.
Don't recognize that one. Anyway, so Rob Gronkowski, better known as the Gronk, is a legend in the NFL. And he was kind enough to stop by just a short while ago and tell us about his new venture, Abacus Health Products. I'm joined now by Ari Hanselman, who is the CEO and founder of Abacus Health Products, and Rob Gronkowski, who pretty much needs no introduction. Gentlemen, welcome to the show.
Thank you for having us.
Thank you.
Ari, let's start with you. Tell me about Abacus. What does it do? What's the game plan?
Sure. So we are the premier CBD topical products company in the United States. We have the largest footprint in retail pharmacy. All of our products are efficacious, they are safe, and just extremely efficacious. Mm-hmm. So we continue to roll out these products into retail pharmacy, and as well as retail pharmacy, also into the healthcare practitioner space throughout the country.
Yes.
In just a very short amount of time, because the products are so efficacious, we are in over 15,000 locations in health practitioner offices throughout the U.S., as well as a retail pharmacy of the largest retail national chains throughout the country.
Very cool. Well, I'm glad they're efficacious, but do they work?
They do.
I'm just kidding.
That's a great question. And we have proof of that as well.
Right. Rob is living proof of that.
No question. But even on top of that, okay, because you could say, well, that's anecdotal.
Yeah.
Right? However, we did a third-party survey of over 250 doctors and practitioners in the space who have been using our product for the last several years, and that result was 97.4% of them said this is the best product they've ever used as any analgesic topical product in their practice. Now you're talking about practitioners and doctors that see over 100 patients suffering from pain a week. You're talking about physical therapists, chiropractors, massage therapists, naturopaths, acupuncturists. So this is real. These are doctors, practitioners that are giving us this feedback of how well it works. And what the reporting is that in the last 30, 40 years, there really hasn't been any great new science, any new great breakthrough in analgesics and topical pain. Most of the products in the market will work 20 to 40 minutes. The report back from them is 2 to 6 hours of pain relief. And that is a game changer. That is actually a disruptive technology. Can you imagine you can put a product on once a day and have a deeper pain relief than you ever had beforehand and longer pain relief? And that is a game changer because you're happier,
Sure.
throughout the day. It's not just, 20 to 40 minutes. I can actually go several hours with having this pain relief. And maybe you'll take it a second time. A lot of people, pain will wake them up in the middle of the night. So imagine taking
Right.
it also just before you go to sleep as well. And that is why it's a game changer. And people are saying goodbye to some of the NSAIDs, to the pain relieving pills that they have
Sure.
because this is so effective. And that's wonderful because this means it's a safer way and it's a targeted application as well.
Cool.
Why treat your entire body when you can, if you have pain in your elbow or just pain in your knee, just apply the topical product to that location and have pain relief for so many hours.
I can't wait to try it. Rob, how did you get involved with this company?
All right, I got involved because I had a little altercation. On July 4th, I was playing soccer, got off the boat playing barefoot soccer, stubbed my toes, with 3 black and blue toes, and, can't put my shoes on. It was bothering me, couldn't walk around. And my dad, he knew I was healing in an all-natural therapeutic way. And he told me he had this cream that he's been using for his back, gave it to me. And to make a long story short, just put the cream on my toes. It gave me that relief. I could put my shoes on, go throughout the day with whatever I was dealing with. And, it lasted for about 5 hours that day. And then I just put it on again, and then gave me that relief again, so I can just go throughout the day without thinking about my 3 stubbed toes that are super black and blue. And then just did that for a couple days, and, it started promoting the healing. I could do the treatments I wanted to do to my toes to heal them. And next thing you know, 4 days later, 4 days later, I was totally healed. My toes were fine, but it gave me that relief that I was looking for throughout the day. You know what I'm talking about?
Yeah, for sure.
Yes.
Okay, cool. So then, as a pro football player, how important do you think CBD is to the future of the sport?
I think it's huge. Right now, it's not, legal, but
Right.
I think over time it's going to be legal. All the research, development, all the science that's behind it, it's coming. It's all coming. The education on it, it's starting to come around. It's starting to come around the corner, and it's just going to take a little bit of time. Nothing happens overnight, and and when that happens, it's going to be great. It's going to be great for players. It gives the players another option, a great alternative to help relieve pain in a safe, alternative, all-natural way.
Okay, so the regular seasons are supposed to go up to 18 from 16, and players' union isn't exactly pleased about that. Do you
Yeah.
think the allowance of CBD as a tool to help recovery is a major part of that program that could help the players' union get behind it?
18, 16 games, that's a whole different ball game you're talking. I would say there's going to be so much more talk about that than just allowing CBD to be legal and to make it 18 games. And there's so much more that will go into that to make it 18 games. But to make CBD legal will just be a great alternative for players. And it doesn't matter if you're playing 18 games or 16 games. You're still taking hits every Sunday. You're still taking hits throughout the week at practices, and also you already have 4 preseason games that you're taking hits at. So I think it'll definitely be a huge step forward to allowing it, to advocate it, to allow the NFL, to allow all sports authority to legalize CBD, because it's just, it's all natural, man, and the ingredients on the topical cream that CBD Medic, that Perry created, is just an all-natural way. It's not just the CBD that's all natural, it's the whole entire product is all natural, and it has pharmaceutical-grade ingredients with menthol and camphor, which definitely help out too. That's the main ingredients that help out, and then the bases with beeswax and 5 essential oils. And it's all natural, it's safe, and that's the best way to go.
You bet. Where can we buy this product today?
Well, you can buy it in over 5,000 locations, retail locations throughout the United States. It's actually offered in 24 states. And you can also get it at healthcare practitioners. So you can go online to cbdmedic.com, and you can just type in your zip code and it will show you there's a store finder that they can help you buy it, or you can buy it online.
Very cool. So pro football players, they play football every Sunday. Once a year they play on Thursday as well. If you had CBD between Sunday and Thursday, would that make the Thursday game that much better?
It just gives a safe alternative way for players to recover quicker. Definitely, it's not going to, pull a miracle out. You're going to still have to put the work in, but, it gives you that relief throughout the week. And, it could, if you got an injury from Sunday, a little bruise, you could definitely apply it on and get that relief that you're looking for, especially during a quick recovery week from Sunday to Thursday, because that's a super quick turnaround. You got to literally be on top of it right after the Sunday game. You got to start doing your type of treatments. You got to start applying what you need to apply to get ready for that Thursday game directly after the Sunday game. So, that's a quick turnaround, and, I believe that CBD Medic topical cream and CBD would definitely, give you a little bit of boost, a little bit more benefit to help that recovery from Sunday to Thursday.
Yeah, you bet. All right, so what is the current approach to dealing with pain and recovery from play-related injury?
It's all about the player, man. It's all about how they approach it. I mean,
Right.
when I was
So
a
it's a
young,
personal approach.
It's a personal approach for real. It truly is. I mean, it's how much you can deal with pain, how much you want to deal, how much you want to get better, how much you want to heal, and everyone's different. Some people, there was times in my career, young 20s, you just think you're never going to get hurt. You think those injuries just go away. You just mentally tough it out. You don't really do anything. You don't really have a routine when you're young. But as you get older, you start feeling it more, and and when you start feeling it more, it's not as pleasant playing and everything. You start finding ways to deal with it. You start doing treatment methods. I mean, there's acupuncture out there. There's massages then. And then I started focusing on that. Started learning about that type of stuff. Type of exercises you do help you heal, help you realign your body. So it's all the preference of the player. It's all dealing with what type of injury you're also dealing with. But the best thing to do to recover during the week is to get on top of it directly after the game. That's the best way to heal, so it doesn't do as much damage to your body having that injury, and to get on top of that injury that you sustained throughout the game.
Very cool. What's the sort of runway look like for Abacus as a business going out into the next year from an investor perspective?
Actually, quite wonderful. In fact, by the end of this year, we expect to be in over 7,000 locations starting next year. What's unique about those 7,000 locations, a lot of those stores are just the initial rollout. And they actually represent north of 30,000 locations when they decide to go chain-wide. So if you look at a major retail chain, and they have only put it in, let's say, 1,000 or 1,500 stores, but that retail chain eventually will roll it out into 10,000 locations. You take that, multiply it to 7,000 stores, you multiply it by, let's say, even 5, and you can be in 35,000 stores. Just that is already. But in addition to our rollout into retail pharmacy, which is a very large market, there's 100,000 retail pharmacies in food, drug, and mass throughout the United States. 70,000 of them are retail chain related. But in addition to the retail chain market, there's also the convenience store market, another channel that we'll be working in as well. And we have also the existing market that we're very prominent in. We have the leading brand in that market as well, which is the healthcare practitioner market. Then we have the entire Gronk line coming out in the end of first quarter next year.
Really?
So with all these coming forward, it looks great. And I had to say it, but the writing's on the wall. Where we were 9 months ago to where we are now, where we have the footprint, the necessary footprint. We have the technology. We have the distribution channels in place. We have that wonderful footprint with 13 SKUs in one of the major retail chains, 14 in another major retail chain. That is a phenomenal position to be in.
You bet.
So yeah, it's really looking great for next year and of course the year after that.
Great. All right, gentlemen, that's an awesome introduction to the company. Great to talk to you both. Thanks for joining me today.
Thank you so much for having us.
Yeah,
Really appreciate it.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Wow, hey, whoa! Was that actually Rob Gronkowski on our show? Oh my God. Oh. Yeah, interesting. He did say that if the NFL regularized or permitted the use of CBD as a recovery tool for players, that he would come back and play pro ball. Now, he wouldn't let me, part of the condition that I had him on the show was that I did not ask him that directly. And so,
he doesn't want to. There's a lot of people watching.
Well, I think he would have riffed right off on it, but I'm pretty sure it's like the NFL doesn't want him to.
Maybe he wants to get his pension from the NFL.
Well, I think maybe he wants to play ball again.
So why did he quit?
Why did he quit? He's tired of playing football.
Well, then why would he want to play? What?
He had an injury, yeah. What do you mean, why did he quit?
Did he?
Yeah. He told us about it. Weren't you listening? He just told us about it. Where were you?
I was too mesmerized looking at him.
Really? Wow. But anyways, yeah, so Abacus Health, let's take a look at that chart, Ed.
What's the ticker?
I'm going to call it Abacus just because I'm a contrarian.
You never told me this was a public company.
It's a public company. What do you think he's doing here?
What's the symbol?
Passing around the pigskin? ABCS.
A, B, C, D.
Nope, ABCS. So
Well,
this company's got 32 million US in the bank. They came out trading at 18 bucks a share. Obviously, market conditions took them down to 6 bucks a share.
And was that the gentleman that was the CEO, right?
No, he was the football player. Yeah, there was the CEO. What a football player.
I
and
got something good to say about
football
this
player and the
chart.
CEO walk into a bar. The bartender says, "What are you doing here?" And Rob Gronkowski turns around and rubs oil all over his head. Boy, I could really build a joke if I had the time, but probably not a good idea to do live and demonstrate yet again our unscripted and really poorly thought out nature of our show. Mind you, we enjoy the hell out of it.
We got a change in direction on this one here, right there, and now we're testing. You know, this might be a bottoming process if they got lots of cash, obviously.
Yeah.
This is not a bad looking basing.
Basing, like free basing.
Well,
Now's as good a time as any to put up like a cannabis chart. Or not the cannabis chart, but rather the index charts. And just want to point out that, 66 people watching despite our best efforts at promotion on our YouTube channel, proof positive that Google is a biased and I suspect acting anti-competitive industry, which we are going to explore in a future film called Man versus Algorithm. Feature-length documentary that we're putting together that will examine Google and its parent company Alphabet's anti-competitive behavior in suppressing traffic through algorithmic bias. Very interesting topic, but I digress. This is about cannabis, not about the evil Google empire.
right.
I'm looking at, but I know you can't because my NDI is not up, but here it is now. I'm looking at, on a full screen basis, let's go to full screen view. Oh God, enter full screen. Okay, so here we are looking at another red day.
This has got to get to some people, right? Like, I mean, the investor.
CSE index down 2.4% today. Venture cannabis index down 0.07%. Do you think that MYM Pharmaceuticals, or MYM-Ceuticals, what the hell is the company called again? Reporting no revenue is part of the problem? Probably profited from that. We should have looked at their financials.
Right.
Let's see, actually. Oh, that's Apple. We don't want to mix apples with cannabis. That would not be accurate.
You get applesauce or something.
The CSE index down 2.4. The venture down 0.07. The large cap index down 2.13% today. But the small cap index is down 0.8% today. Let's see
where the action is.
Where the action is. Where the action is. The action is.
I'm looking at weed right now, hugging, trying to stay above 26 bucks. So far, so good. It looks like, look at this chart. Look at this trend. We had a nice up move, and ever since that up move, there's your Bollinger limits.
Yeah. Well, so the bear market stays intact.
Nothing's changed.
Well, despite repeated attempts by the bulls to gain the upper hand, I'm channeling Dan McDermott now as we speak, but we still have yet to see those lower, higher highs and higher lows.
Yeah, you want.
See, I'm learning, Dan. I'm learning. If you're watching,
Dan says some very, very
smart things,
relevant and germane. Well, relevant and germane. I guess that's the same kind of.
Relevant and germane.
Little superfluous there, wouldn't you say?
Superfluous, obsolete, excessive.
I was saying the same thing with
redundant,
superfluous,
redundant. To say repeat oneself. No, superfluous.
Anyway,
superfluous. Anyways, here we are looking at the constituents of the Midas Letter Large Cap Index, and this is just because I don't feel like everybody is quite miserable enough yet who's holding large cap stocks in the cannabis space. Here we have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of 15, 16 constituents are red. And the only bright spot on this thing is, of all companies, the Green Organic Dutchman is up 4.12% to $1.02. But are they up on news? Well, let's see. What is the news? The Green Organic Dutchman announced today that they're adjusting their construction roadmap for their facility in Hamilton. Now, this is an interesting, I love the wording. We're adjusting the construction roadmap, meaning we can't afford to build anything, so we're going to turn it into a drive-in movie site. No, just kidding. Not to be too mean, but they tried to raise some debt and they couldn't. Then they unveiled a new strategic plan. So this is interesting. Now the cannabis companies are going to start coming out with strategic plans, how to stay in business without raising capital. And it's going to be groundbreaking.
Don't mean to laugh.
No.
But it sounds like somebody should have thought about this a year ago.
Well, or 4.
Whoa.
You know, in a perfect world, well, let's see, that's basically what we're in right now, in my alternative reality, where the stupid people rule and the smarter people, I'm going to put myself in that category. I'm in a
just because you have money doesn't
stupid
mean
all my own, believe me.
Just because you have money or don't have money doesn't mean you're smart or stupid.
No, in fact, all the stupid people I know are rich as fuck. Like, really. And they think that they're smart because they've got all this dough, but they don't realize the extent to which their money controls them.
Our friend Alan, who likes, and he mentioned True Leaf.
Who's friend Alan?
Oh, the fellow from Texas.
Alan Brochstein?
Yeah.
Oh, our friend Alan.
Yeah.
That's how we're referring to him now?
Well,
I'm fine with it.
Our business colleague.
Our regular contributor.
Okay.
Our guest.
But you know, and I happen to agree that this True Leaf, not that my opinion matters for much.
Your opinion matters to me, Ed.
Okay. So they're considered one of the better companies. They're opening. They're just sticking to their knitting. They're focused.
Truly.
They just raised $60 million.
Well, they just reported 52 cents in earnings in their last interview.
And they're able to get to $60 million, but it's not debt. It's not equity. It's debt.
Debt.
9.75 interest rate. That's onerous in this world we're in. So they're willing to go out and borrow money at 9.75, $60 million. They must have some ambitious plans.
So. And a lot of people don't know how to think about debt. They think about, well, that's not bad. At least it's not dilutive. No, what that means is their margin has to absorb 10% just to pay the debt, just to factor in the debt.
Yeah, that's why EBITDA is such a metric that.
And we were talking about that yesterday. People don't really know what EBITDA means.
Yeah.
And we're talking about, and this, I apologize for those of you for whom this is laughably rudimentary.
For whom the bell tolls?
For whom this is laughably rudimentary. And the initials are, like, everybody's waiting to see if I get this right, Ed.
Okay.
EBITDA. EBITDA.
What's the E stand for?
E. Earnings.
What's the B stand for?
Before.
What's the I stand for?
Interest.
T?
Tea time.
TT.
TTs. Your TTs. Earnings before interest, TTOS, TATs.
Taxes, depreciation, and amortization.
Interesting. So interpret that for us.
It's trying to really, like money goes out and money comes in. And I think if you back out these things, you get to a number that
is a reasonable representation of the margin.
Of cash flow.
Net of costs.
I look at it more of as a cash flow thing.
Net of cost, but before... before everybody else is getting their cut.
Well, before taxes, because, if you didn't make any money...
That's the government getting their cut. But before interest, that's the bank getting their cut.
Yeah.
So you still could be making money, but that's before everybody gets their cut.
But they're trying to say, okay, what's going on here? Because if you have a lot of depreciation...
Right.
That reduces your income, but you never paid for the depreciation. You paid for it when you bought the property.
Yeah.
You're writing it off over time, so you set it up as an asset and you depreciate it or amortize it over...
Right. So now what if you buy, as part of your asset base, a Gauguin, for example, or a Renoir? How fast does that depreciate in the EBITDA mix of things?
That's a little different.
This is a problem I have with EBITDA. It is somewhat subjective. It claims to be, it purports to be, it presents itself, thanks to IFRS, as a objective quantification, not a qualification, a quantification. So tell me then, what does adjusted EBITDA mean, Edward?
There's probably another adjustment on there.
Like an attitude adjustment?
Yeah. Adjusted EBITDA. It's adjusted.
Does that mean whatever the hell we want it to mean?
Probably.
We can add anything
I don't know.
and call it adjusted EBITDA, adjusted earnings, adjusted net income.
Well,
if you see adjusted, you really got to take a look at the numbers.
What's happening is a lot of this goodwill now, accountants are going,
And to remind me again what goodwill is?
well, in the CICA handbook, Canadian Institute of Chartered Accountants, the chapter on goodwill is goodwill and other nothings.
I love that.
And I saw that, I thought, so you see a big number for goodwill and other intangibles. God only knows, what other intangibles could there be if goodwill is nothing? Why don't you just throw it all into goodwill? But no, they have different categories.
Boy, oh boy.
Other nothings.
One day, do you think in the future that, that the accounting forces that be will say, you know what, let's just get rid of that goodwill thing because it's just a little hard to take.
Well, let's say you bought the rights to, say, a famous person, and
Bought the rights to a famous
well,
person.
let's
Off
say
of them or a posthumous deal.
they came in here and they said, I'm going to do your show, but I'm going to sell my expertise to the show. So you say, okay, here's the amount, but how do you value that? That's basically goodwill. There's no tangible value there to hire. If you brought in a guy like, say,
Well, I don't know. If somebody comes in and does a service, you're paying for their time, which, while not exactly tactile or tangible, certainly exists as a unit of value. In fact, some would argue that the most valuable asset that we all have is, in fact, time. So I don't think that should be considered in that context. If you pay too much for something and you try to pass it off as an enhanced asset on your balance sheet by saying, well, they only wanted 40, but we paid 60 because we needed the 20 in our goodwill to pull off this adjusted EBITDA bullshit, then no wonder investors are having a hard time making sense out of these so-called financial statements, financial misrepresentations.
Well, that's why we go back to Alan Brochstein. That's why he said, you got to do a tangible net asset value.
Tangible net asset value.
That backs out
X of goodwill.
And other nothings.
And other nothings.
Yeah.
It's 4:01, Ed. We've gone overtime by like a minute. Yeah, you've got your own clock now. Have you seen that? You can theoretically
It's
tell.
4:01?
It's 4:01.
Well,
what are you going to do now? You going trick-or-treating tonight?
No, but I'm
I see you've been dressed up as a technical analyst.
Yeah. That's my costume here.
That's it, the little fox face. Anyways, thanks for watching, everybody, and come back tomorrow if you enjoy yourself. If not, go...
21 Filthy.